Good morning. It's Monday the 8th of December. I'm Patrick Weightman and this is your Monday morning mortgage market update. Let's dive straight into what's been happening because lenders have been busier than the elves in Santa's workshop. Except instead of making toys, they're dropping rates and expanding criteria. So there was a proper flurry of rate drops at the end of last week. Nationwide reduced selected fixed rates by up to 0.21%, and there were targeted reductions for first-time buyers, home movers and remortgage cases. Coventry Building Society reduced all of their fixed rates between 80 and 90% loan to value, all their 2 and 5 year fixes between 90 and 95% loan to value, and there were also reductions from the Coventry on selected 3-year fixes. And that was for new and existing customers. At NatWest, we saw improvements on maximum loan to values and pricing cuts on several residential products. Halifax expanded access to their first-time buyer boost, and crucially, they've now opened up this scheme to self-employed first-time buyers as well as employed ones, which is a massive win for sole traders and small business owners. And they also removed some of their limits for self-employed, making affordability a bit easier. Virgin Money, Barclays, HSBC, they all put in reductions. They were smaller but still meaningful. And there's stronger competition starting to appear in the 75 to 90% loan-to-value bracket. It really is starting to feel like a Christmas price war. Lenders are wanting to bring in business before the year end, and they're really starting to sharpen their pencils. And of course, all eyes are on the Monetary Policy Committee, who are meeting on the 18th, meaning we're just 10 days away from the final Bank of England rate decision of 2025. And the market expectation is that we're going to see a 0.25% drop. And that's coming in from multiple sources. If it happens, it'll bring the base rate down from 4% to 3.75%, which would be a real win for anybody on a standard variable rate or a tracker. But for those on fixed rate mortgages, lenders are already pretty much pricing it in. But why is there this optimism in the market when the news says everything's doom and gloom? Inflation's easing. We are into a period of disinflation. Wage growth has stabilised. Borrowing costs are slowly drifting downwards. Lenders are really starting to position themselves ahead of the announcement, but the big question is, will it be December the 18th or February the 6th? Whichever it is, things are definitely heading in the right direction. So let's take a quick look at the current average mortgage market rates. These are approximate figures from Moneyfacts and Rightmove, and we've got 2-year fixes at 4.34%, 5-year fixes at 4.38%, 95% loan-to-value products trending down again, the lowest since 2022, and 75% loan-to-value 2-year fixes dipping at around 4.1%. Competition is clearly increasing week on week. So what should you be doing right now? If you're looking to remortgage, don't wait for the next MPC decision. Just get something locked in. Better to act now, and with most lenders, we can always change out the deal later. For first-time buyers, high loan-to-value products are getting cheaper, and access to things like first-time buyer boosts are getting easier. For self-employed borrowers, you've genuinely got more flexibility than you had 3 to 6 months ago. And for home movers, there's a lot more choice around the 75% to 85% loan-to-value market. So that makes it a lot easier to plan your next move. So we're heading into the last major economic event of 2025 on December the 18th, and all signs are pointing to a rate cut. If you enjoyed this video, found it informative, then please follow or subscribe. I'm Patrick Weightman, your local East Midlands Mortgage and Protection Advisor, advising clients up and down the UK. Links are in the bio. Speak to you soon. Bye-bye.